Good morning, folks. Glad you're with us today. Hey, it is Thursday, the 13th of February. We got jobs today. We also have the producer price index coming in today. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have and making sure that it lines up with the amount of risk you should have based on your current circumstances. Give me a call at 863-382-0037 to schedule your core retirement analysis. We've got Dave coming up next.
105.7 Light FM. I'm at 75 degrees here in Sebring. Hazy, mostly cloudy skies, sunshine later on today, and up around 87 degrees this afternoon. Yeah, just to reassure you, it really is still February, I promise.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And you can use a good financial advisor. We got one here. His name is Phillip Statler from Statler Financial Services, who's on the phone to noodle through what's going on Wall Street this morning. Phillip, good morning. How are you?
Hey, good morning, David. Doing well. It really warmed up this morning, man. I'm telling you, it was about 10 degrees warmer than yesterday.
Yeah, the Sebring Airport, we bottomed out at 72 degrees, and we were only at 64 this yesterday morning at the early start of the day. So, yeah, it's starting to feel like May already. And after January, I'd promised everybody I would not complain about it being hot, and I won't break that promise until at least July, because right now it feels kind of nice. Well, yesterday was we really were expecting a bloodbath yesterday morning when we got the consumer price index numbers out. It started out that way, but we ended up crawling back to, it wasn't a great day, but still it was at least respectable. Dow ended up down 0.5%, down 225 at the end of the day after the consumer price index really disappointed. S&P was down 16.5. NASDAQ actually managed to eke out a gain yesterday, which really shocked the pants off of me after the way that we started out. The consumer inflation number was more than we expected, and that made the market unhappy. So what happens? We go on to this morning, and we get the producer price index, and I'm sitting there when we got on the phone originally. I said, oh, Lord, they were expecting like 0.3% increase top line on producer prices for wholesale inflation. Comes in a third more than that, up 0.4%, and I figured we were going to really take a dive. Maybe we made all the changes we wanted to yesterday, huh?
It could be, Dave. I'm not sure, but the market did not act the same as it did yesterday with the numbers, right? I mean, that's an inflationary number. That means prices are going up at the wholesale level, but yet the market this morning does not seem to be phased by that at all. I've got green ink across the board on the indexes.
Oh, good Lord. Yeah, I'm still working on delayed quotes here for another couple of minutes, and I'm still looking at kind of a flat to nothing opening, and that always looks good when I hear you say that the current numbers are showing up. What was the annualized number? My ticker didn't give me that. Annualized, what are we looking at top line producer inflation?
So top line PPI was the same as before, is 3.5%. The core last reading was up 3.5. It actually went down to 3.4 for year over year in this reading.
Well, thank heavens for small favors, huh?
Yeah, I guess that's the only decline I saw.
Pretty much it, yeah. And that kind of, according to my tip sheets, is pretty well made it a fait accompli that the market is expecting, and now they're saying at most one more rate cut from the Federal Reserve, and that'll come in the second half of the year. So if we get anything that isn't a rate increase, at the very least, the Fed's kind of out of the mix for the short term as far as investor expectations are concerned.
Yeah, given that we've seen two numbers come in now, I mean, we only got one more inflation indicator and that's the one Paulson really likes. But we'll have to see what that one is. And that one comes in. I don't know if it comes in this week or next week, but that'll be the next indicator, and that's the one the Fed really pays the most attention to. But the two we've had so far indicate we still have inflation.
Yep, and tomorrow we're going to get an indication anyway, because we got the retail sales number, and that tends toward being at least a little bit of a tracker toward the personal consumption expenditures inflation rate. I think that's set to go out next Friday. You know, they generally tend to drop it right before a Federal Reserve meeting scheduled, just in time to give us a little bit of a stomach upset before it happens, right?
Yeah, yeah. Tomorrow we've got import prices and U.S. The retail sales number comes out tomorrow.
Both of which are kind of an indication of what inflation looks like. And so far, the two indications we've had so far this week is 2% is starting to look more and more like a pipe dream as far as the eye can see.
Yeah, you're right. It's we're nowhere close.
I was kind of, while we were talking there, I was looking. Yeah, you mentioned that the markets on the equity side weren't unhappy with that. This is also kind of weird. I'm looking at bond yields falling a little bit too. I mean, the 10 years down by 5 basis points this morning and trending downward. I don't understand really why we end up being optimistic on what 3.5% is good news on wholesale inflation.
Yeah, me either. There must be something else driving them today.
As near as I can figure, we look at it, we talk about this all the time. You can make money in any economic setting. It sounds to me like basically yesterday we readjusted for an inflationary economy, and this basically confirms the strategy the big money guys ended up deciding on doing yesterday.
Yep, exactly. So it's just you never know what they're thinking and what's what the play is for the day.
Absolutely. It was kind of interesting after that. I was paying some attention to Jay Powell, who was testifying in front of the Senate yesterday. They asked him, "What are you guys going to do about inflation?" And he almost sounded like Alan Greenspan. We want to keep policy restrictive for now. We're close, but we're not there on inflation, which is about as non-committal as you can get. He's starting to figure out what that job is. Shut up and you don't excite things much.
That's right. That's right. And yes, we're not there. That's for
And like
sure.
I said, conventional wisdom now looks at most one more cut in interest rates coming out of the Fed before the end of the year. Talking about the market going the opposite direction of what you and I as laymen would expect it to, do we have any reports coming out this morning that are giving people good humor?
And we do have some. Let's start out with Robinhood because Robinhood has its up and downs
Mm-hmm.
over the last couple of years, but they really they had a good quarter. I don't have their net their net income, but their gross revenue was way better than expected. Um, Came in at they crossed over the $1 billion mark for this
Wow.
last quarter, and they're trading up almost 14.3%.
I did see a top line number on there too. They said their business in crypto markets is going crazy as well. As adventurous as Robinhood tends to be, couldn't surprise me all that much that they're big in crypto as well as equity trading, right?
Oh yeah, absolutely, absolutely are. Hey, another big name in travel and resorts is MGM
Mm-hmm.
Resorts, the resort and casino. They had a beat on revenue as well. They didn't really tell us what their EPS was, but I'm guessing it must have been good too to get this kind of bump. They're up a little over 10.5% this morning.
Ooh,
Yeah.
good news.
Now Reddit, on the other hand, fourth quarter. Now they beat on top and bottom line. However, one of their key metrics that they look at is the unique visitors every day.
Daily
And,
active users, I think is
yep,
the phrase they're
yep.
calling
And
it. Yeah.
so it was up 39% year over year, which sounds really
Mm-hmm.
good. But the analysts expected that number to be 103 million a day, and it was only 101 million. And so Reddit's getting punished for that this morning. They're down almost 8%.
Which means basically you've got to knock it out of the park if you want to make people happy if you're on social media right now.
You got to hit all your metrics if you want to, move in the right direction.
Absolutely.
Yeah. Cisco Systems, another technology company. They're networking. That's their big thing. They had a better than expected guidance for their second quarter. Revenue grew by 9% year over year, and so that was looking good for them. And that's got them trading up about 6% this morning. However, we have another
Uh-oh.
down deer here. So John Deere.
Uh-oh.
Yep, not so good for them. First physical first quarter report reflected some subdued demand going forward, even though they beat on their profit and revenue for this quarter. Outlook's not good. They're down 4.5% this morning.
I would kind of expect John Deere to have pretty conservative guidance given the tiff that we're having with China over shipping junk over there and our trading tariffs and whatnot. They do a lot of business overseas at Deere.
Yeah, they do. I'll give this last one, the big loser for the day, a company called
Uh-oh.
Trade Desk. Now, Trade Desk is a digital marketing company, and they reported soft quarterly revenue. They issued weak guidance, so they missed on revenue, and so that wasn't really good for them. They're trading down today 30%.
One of those times I'm kind of glad that's not a stock I've ever heard of. We'll
For a
start
while,
out.
I'll tell you, it was a big time. Everybody was trading it for a while.
Oh, Lordy. Well, resetting the table for the morning because we got better news on that than we have on that one stock, that's for sure. After a more subdued response to the consumer inflation figures than we expected, we kind of recovered to at least a dignified day yesterday. 45 minutes before the equity markets open this morning. What are we looking at anyway? I'm surprised.
We got some green ink today, Dave. The Dow's up 0.2. The S&P 500 is up almost 0.2%. The Nasdaq 100 is up 0.3, and the Russell 2000, after getting beat up yesterday, is up 0.5%. So good news across the board there. This morning on the other side, commodities, we got silver trading down about 0.6%, gold trading up, not quite 0.3%. And then our favorite, crude oils, heading down this morning 1.1%, $70.54 a barrel.
Yeah, you go, baby. Nothing like an oil glut. Nothing like an oil glut to help you out on that number. Looking across the pond, the Asian Rim market was generally off. They were responding to our inflation concerns. When the markets closed in the Asian Rim, almost everybody was in red ink. Not monstrously, but, 1% or so on the worst losers and 0.5% on the rest. Over in Europe, they're seeing a little bit of optimism this morning. It's kind of all over the place. France and the German market are up by better than 1.5%. UK's down by about 0.5% this morning. Overall, the European community up between 2/3 and 0.75%, though, halfway through their trading day in Europe. Getting my retirement together needs an expert pair of eyes to turn dreams into plans. Dreams I can't count on, plans I can. How do I find you to get a plan for my retirement?
Absolutely, Dave. That's why I created the Core Retirement Design to help people design that retirement they did dream of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
Hey, and back here again tomorrow morning to see what the market did today and what's likely to affect your money tomorrow here, same time on Light. You have a good day, and we'll catch you then, all right?
All right, man. Take care, Dave.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Take care now. Bye.